Welcome back everybody into a new week on gold. Today is the 15th of August. I was almost saying 11th, and it's a Monday. And as you can see, we had pretty nice price action going on. This is happening all through Asian and London session. Over 300 pips move, over 280 pips move after the new week. Price opened and failed multiple times to break above our supply area at 1801, 1802, which was the previous supply. If you remember from last week, we were watching it, this supply area as well as this one. This one was more short term, gave some further rejection, if you can see here, but this was on Friday. But afterwards, during the weekend and with the new week open, we had the failure, especially here, that was during the Asian session, Asian Open. We had the bullish attempt, but failing to break, and then giving you further break and retest all the way down, breaking below PSAs, breaking below huge demand areas, all the way back to the further demand area, which has been found on the 15 minute at 1770, and this PSA as well, which you see also on the hourly, is much more clear. The rejection at the top and the bounce from 1772, which was the PSA left on the 8th of August, and we also had this further down demand area, and eventually the 1750 demand area. But for now, today we had this bounce at this level, and that was it. But let's jump into the price action of the New York session, because we saw, let me just delete on the brushes, dark, because we saw that through London we all had a very strong bearish move, and we were left with some supply areas, especially on the 15 minute. If we zoom in, my supply area were charted up with these previous price points, where price on the way back down had some reaction and possibly left some liquidity. And there you go. As you can see here, they were very close overall. There was like a 15 pips range between them, and you can see that New York Open failed to break below, and we were very close to a demand area, and not quite at the PPL, but as I showed you on Friday, I guess, or Thursday, price failing to break below. This is in New York, almost approaching the COMEX Open, and this is the push, because if price fails to make its way down, then we turn back up, and there you go, very quick. This is more than 100 pips all the way from demand to supply. At supply, this is quite sketchy because you have two supply areas, but first you can try and attempt an entry at the first rejection and you take a loss, and then you wait that the rejection is happening at the second supply area, and there you go. I also showed this. This one was already gone, but this one was seen live. As you can see, 2:33 is 8:33 a.m. Eastern. Multiple rejection at supply. Even this candle is confirming the liquidity on the downside. That was my backtesting entry, and this is my 60 pip. As you can see here, we already identified that this is a possible demand area, and the price can possibly bounce from here. You start to see the long wick left on this candle, and the candles are already getting smaller and smaller, and as you can see, we are getting 8 minutes before the new 4 hour, and that's when the support is created at a demand area, and you have the confirmation for possible quite for scalps, long, like 48 pips scalps from demand all the way to supply. But what time is it when it reaches the supply and the previous PSA? It's 2 minutes to the new 4 hour. So that can, and this candle confirm can give you, okay, so this one was the pullback before, as you can see here, already identifying the sell. Why? Because this is the pre 4 hour pullback end. This one was the closed or the 4 hour, and this is the new one. You don't always need a top week or whatever. Sometimes it happens earlier than that. And this is the 4 hour, yes, which closed over there. You see the pullback went all the way back up and closed like this. The very next one gave the bearish, so made the lower wick on the new 4 hour with the possibility of then pushing bullish. So this is a quick scalp sells, so nothing special. Just give me a second. Okay, I'm back, and as you can see, from supply to demand, you already started to see that the same price action is happening here. If we watch on the 1 minute and we put the PPLs, we see that the price is possibly creating a new higher low. So if we validate this demand, the price never reached the supply actually again, and this can be the possible higher low for the price to continue up until the supply. So if you had your buys over there, you are still going to the supply, from demand to supply, or you are buying from a demand area, pullback, buys, pullback, buys. That's what you are waiting for. You're waiting for higher lows and higher highs to continue up. But you see that this is a strong PSA, strong supply area. You can't always, price can't necessarily go up easily. And if you look at the timing, we are 5 minutes before the New York Stock Exchange opening. This was the aggressive move. As you can see, there's a little bit more volume, it's a spike. Like here, there's a little volume, but before going down, there's a spike up and then going down. It feels like a vacuum to then push down, because if it's slow vacuum, then it's likely that the price will not continue up, because the vacuum will be liquidity down and to then continue up. This vacuum exactly at the supply area means that price will continue down, and this is sort of what happened in the supply area. New York Stock Exchange pullback is done. The open is here, makes a top wick, closes bearish, and then from supply all the way back down to demand. Here, this, as you can see already on the right, we have this demand area, and we have the 4 p.m., which is the 10 a.m. candle opening, and failing to break. This is the 10 a.m. candle, failing to break this area, and there's a possible buys, but I mean, in my opinion, if you took this COMEX open buys all the way back up, maybe you took a loss, but then you took this win. Maybe you saw or you didn't see. I mean, this one was pretty easy, and you saw this. You already had your 3-4 trades, so there's no need to enter. This is just for backtesting purposes, and as you can see, the price action is very sketchy. Price actually never breaks below your support, so you're always safe. It's just that the volume is slowing down. It will end up going back to like 60 pips, going back to your supply, but I mean, it's a very much slower pace than doing the full New York open. But you can still identify, if you look at the chart, that there's a structure here. We have this order block being created between these highs and the support, which is the same support as beforehand, and you see that the price, before going actually up with more volume, needs the retest of the lows. As you can see here, you have the retest, price failed to break. Now you can have a second or even the first entry over there, even with 15 pips stop loss instead of 20, and going for 40 pips to the previous supply area. So still not really good. Maybe for scalps you can even go to, what is that, 30, yeah, 30 pips, and with the price action and price structure over there. Today didn't take any trade because I was coming from quite a weird weekend over talking about the back testing. I was not coming into the weekend in the week confident in my trading plan, trading ideas. So I felt I had to watch the chart and not take any actual trade. As you can see, I saw this candle, I saw this candle set up, but of course price is ranging, so I don't want just to catch and think about catching the bottoms and tops. But when the price was pushing, and this is the next candle, this is the COMEX candle open, exactly this one. I know that there's a volume. If price grab liquidity and demand with the COMEX, price can push up at least maybe to this level. So that's why I was not in a trading mood, but of course then it breaks here, breaks that, you have your confirmation that this was the demand, the full demand here, and this is your new demand area, because if price goes back here because of the very aggressive move from there, it means that there is still liquidity on the buy side because buyers want to enter again. There are some buys leftovers, and that's why you want to enter your buys. And if you just want to stick to one bias for the session, in my opinion, after this price action showing up and maybe you can catch it, then you have buys, and you have these buys and support, and you can have some profitable trades. But understanding the timing and the sells, because overall, as I showed you today, we are in a sell, so that's possibly for you as well to say, okay, let's go on the 15-minute. I want to get like a 50 or 20%, yeah, 50% pullback from of the price action. I don't know where it is. Yeah, basically 50% missed for a few pips, but as you can see, this one was at 50%. Yeah, the last impulsive move, the supply area was basically at 50%, and you want to enter sells again for price to possibly continue down. But again, the demand area was still strong. We are intraday and scalping traders, so we don't really look for huge ranges or multi-days trades, so that's fair enough. You can identify these buys for the reason that I gave you, which is demand area, candle setup, COMEX open, and the break of the order block highs all the way back to supply. Because if you just want to take that, it's already 60 pips. You don't have to take the full, because now price can easily react here, can easily react there. Then you can take the sells like I showed you for the reason that I showed you. As you can see here, supply area, candle setups, and you take your sells until the demand. You even have further confirmation here. You can see how clean. You don't want to catch this because, I mean, it's quite messy. You have a clean break and retest, and the candles is closing nice bearish exactly here. Maybe it's not the best entry, still 60 pips. There you go. And that's also the level where the price will react further. This is a very nice, if you look at the single candles, this candle was so strong, but still failed to close below. And you can see that all the next ones created a flat candle body support, failing to have a candle body closing below. Weak candles. I would have loved this candle. If this exact candle was there, that was a perfect candle setup for an entry. This is still a little bit high for my taste, because 20 pips are not covering the full week, but still you can enter when this candle is going like here, and then you have your entry because you have the confirmation that the price is failing to break, and the momentum of the bearish side is very, very, very weak, and the price can easily go in the other direction, especially if you understand that we are at the top of the order block, exactly like it will happen here. We are at the top of the order block. So you have these candles here, wick touching the top of the order block, closing bullish, and then you have your scalp entry again. Okay guys, this is it for today. I hope you guys enjoyed, and I will see you guys tomorrow.